expecting that. The economy has definitely slowed. But I don't think it's a big deal in the grand scheme of things. From AA plus to AA, it's still fine.
What's your outlook then for Hong Kong equities? We've of course seen this pretty strong rally over the course of this week, particularly midweek, with the official withdrawal of the extradition bill. Hong Kong markets down by about 7% in the month of August. Were you using that as an opportunity to perhaps look at some of your positions when it came to Hong Kong?
I think, if I just talk about, what investors are doing, what we're seeing, there is definitely interest in Hong Kong among global investors. We have seen some switching, for example, by our clients out of places like Korea into Hong Kong. So, in the developed area, Hong Kong does look cheap. Hong Kong earnings actually have held up better than any other market on earth. If you look at the Hang Seng this year, that's largely because we have a lot of financials in the Hang Seng index, and they are often late to adjust their earnings, but even so. But I think in terms of the mainland Chinese investors, what we're seeing anyway is that most investors, I think, are looking at Hong Kong as being a great buying opportunity, but not yet. I think the majority of our mainland Chinese investors are expecting further weakness still to come in the Hong Kong market. And, that partly reflects what's happening in the A-share markets. In the A-share markets at the moment, the earnings revisions are very weak. Shenzhen, for example, earnings for this year now are down 17% from where they were. This is the earnings forecast for 2019. So we're seeing pretty heavy downgrades in China, which are not really being reflected in the Hong Kong listed Chinese stocks, but I think will come, in the coming weeks. So in terms of how I'm seeing it, yes, we've had a good, what I would regard as a counter trend rally since the beginning of August. Asian markets generally up about 5%. But the flip side is that earnings forecasts for Asia have fallen about 5% over the same period. So the market, relative to where it was at the end of July, is 10% more expensive. I don't think you're going to get a sustainable rally until you see a turn in the earnings revision momentum, and I'm not really expecting that in the very near term. I think it will be more likely a story for either very late this year or more likely in the first half of next year, when I think the market will perform a lot better.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.